All right. So, as you know, with our strategy, we first mark the price ceiling and price floors. All right. So, as you can see here, there was a previous price floor, here, previous price ceiling. And here, price ceiling again, price floor, and price ceiling again. All right, after marking prices, ceiling and price floor, I'll request my price at and which Fibonacci I'm gonna use. And I use my Fibonacci's. As you can see, if I zoom in 50-minute time frame, the price is currently sitting at key zone 0.786. All right, take into consideration that the price might be correcting to the upside. All right, use another Fibonacci to check my expansion, equilibrium, and construction level. So as you can see, the price is currently showing that is bearish because it's sitting at the construction zone. All right, just below the equilibrium, which is at 0.511. Then the next thing is to look for price clutter. You can see, going back to 1 hour, I have the price sorry. I have a price clutter here. Price clutter there. And below that, I also have another price clutter somewhere here. And lastly, the downside, I have another price clutter here. All right. So I have all the price clutters. So the next thing is to try and find if I can find, try and see if I can find any appreciation and depreciation level where I will be doing my entry. I like to look for that in 15-minute time frame. So 15-minute time frame, and I can see here is the appreciation level, and here there is depreciation level. So for Euro USD, my first entry would be here below 7 pips, and my target is always 1 is to 1.5, correction 1 is to 2.5. So somewhere here to the downside, and should any fundamental change and the market decide to bounce off from the Fibonacci level, and once it start breaking 10 pips from appreciation level, and I'll be looking for 2 is to 2.5, correction 2 or 2.5 risk reward. All right, make this line of appreciation a bit straight and the line of depreciation a bit straight. So yeah, this is Euro USD, and moving on to the next pair, which is Euro Japanese yen. So again, we start looking at our previous price flow and price ceilings. So that's price flow here, another price flow here, another price flow here, price ceiling here, another price ceiling here, and that's it. Price flow and price ceiling. And the next thing we look at, where is the market currently at? As you can see, downtrending market. So using my Fibonacci tool, so as you can see, the market is at Fibonacci key zone, key level of 0.382. That's why it's been correcting at this level. It might be carrying on with the trend, or it might break up and go to the Fibonacci 0.786. So in order to add some confluences to make sure that I know exactly where the market is currently at and where it is intending to move, also go to Fibonacci and look for my expansion, equilibrium, and construction zone. So you can see the market is currently downtrending because it's at the construction level. So market is selling. So the next thing is to look for the price clutter of this price, right? So if I go to the history of the chart, there's a lot of price clutter. Previous level here, price clutter, and somewhere there on top, another price clutter, and just down below this price here, go further, also a price clutter there. Right, straight. Carrying on with analysis. So the next thing that I'll be looking for, it is appreciation and depreciation levels, right? So with this current price, appreciation and depreciation, I can observe them here, from here, there. That will be my appreciation level. And from here to there, another depreciation level. So moving to 50-minute time frame, I'm looking for buys 10 pips are above this level, looking to enter, and looking for my one is to 2.5 maximum, and for sales I'll be looking for one is to 2.5, targeting to this. Just move the stops a little bit above, so something like this, something like this, and one is to 2.5. All right, so market analysis. Moving on to British pound, Japanese yen. Again, starting with price flow and ceilings. Price ceiling here, price ceiling there, price ceiling there, price flow here, price flow here, All right, use my Fibonacci, looking at the current price. So, and you can see the market is at currently equilibrium. So, it's not above, which means it's at expansion, or it's not below, which is at construction. So, it's at equilibrium, meaning the price is currently correcting. All right, so there's no clear direction. And using the same Fibonacci, pricing and flow, you can see the market already bounced to the key Fibonacci level of 0.618. So as you can see, it was a downtrending market. It might be uh, changing the trend to the upward movement rather than downward movement, or it might be going up and take all the possible price clutter that is somewhere here and go down and take also all these price clutter that are somewhere down here. You can see the market went up, created price clutter to the upward movement, went down, created price clutter to the downward movement. So it's gonna take both sides. The probably is gonna go up, take the price clutter down, then come back and take price clutter to the downward in the near future. All right. So let's go back. First, like I said, you must start finding the price clutter, right? You can see from the previous uh, price movement, you can see we didn't get this entry, and then we got the entry of appreciation based on this price clutter. Like I said, in the near future, the price can break the price clutter and go to appreciation level, and it did. And we took the trade, and we were on profit, and we never went on drawdown this trade, and there we go, right? So now the price clutter that I observe is somewhere there. The price clutter there, right? Price clutter. And if we can extend this price cluster, as you can see, is still valid because the price haven't break that price clutter for the past few weeks. All right, so the price cluster is still valid somewhere there, and there's another price cluster that is being formed somewhere here. Price cluster somewhere here. So after getting our price clutter, then we move on to get our appreciation and depreciation levels. Right, 15 minutes time frame. Appreciation level observed, depreciation level observed. Like I said, 10 pips above, stop loss here, 1 is to 2 or 1 is to 2.5. Same below. Um, I'm a bit skeptical of the downtrend trade because of this price clutter there. What sometimes happen is the price goes down, creates another correction, spike up and come down. So it's taking the retail traders which normally put their orders in this price clutter to the upside and to the downside. So creating another clutter of price that might be taken in the future. So, and my target normally, if there's a price clutter, I put it to a price clutter here with a trailing stop. But however, start with my first maximum profit, which is 1 is to 2.5. Right. So as you go, as you see, this is how I predict the market to move. So moving on to Nikkei, starting with the flow, price flow, price ceiling, Fibonacci, price having turned and corrected and reached one of the Fibonacci key levels. So I'm happy with that. Looking for expansion in equilibrium and construction. The price is currently sitting on construction, which is indicating a downtrend. Next thing on this one, I can even observe something very important, which is a dumping zone. There's a dumping zone here, so there's a possibilities that the price might move in the following. So we'll go up here to the dumping zone, which is also a key Fibonacci level, and continue to the downward trend. All right, there's a possibility. Or the price from here, it can go up to the upside trend. It's possible also. And so, in order to be clear where the price is going, as I can see somewhere here, there is price clutter. So the next thing is to look for appreciation and depreciation level. Okay, see here, there is a depreciation level, which means the price can continue to a downtrend or from here there is a appreciation level, right? So like I said, so if the price breaks up, I'll just see 10 pips, 10 pips above appreciation level, my stop loss somewhere here, and first observe if the price is not going to turn from my dumping level and go back to the downside. I'll be If I enter this position, I'll clearly observe what is the price action on this level. If it's break the dumping level and continue to the uptrend, then I'll trail my stop loss accordingly. But if it bounce back to the downward position, so the next thing is to look at appreciation depreciation level and wait for price to come somewhere here while it's correcting to the downtrend, and look for 2 is to 2.5 trailing my stop. Moving on to gold. So what do I see on gold? So what do I see on gold? First, price floor and price ceilings, right? So there's a price ceiling, price floor, price ceiling. All right. So the price floor is not clear established yet, but however, what you can do is use Fibonacci extension. See how far the prices will be extending. Right there. So as you can see from there to there, the price is already reached the key level. So it might carry on to the level of 2.618. All right, according to my analysis. So the next thing, what do I look for? It is price clutter, right? So I can observe a price clutter somewhere here, price clutter here, another price clutter there. Do I have a price clutter to the upside? Not yet. I do not have a price clutter to the upside. Okay. So what the next thing that I need to look for, it is appreciation and depreciation level, right? So into 15-minute time frame, and I can observe the appreciation level here, and I can observe the depreciation level here. Where do I put my entries? There, targeting this price clutter to the downside. At first, I look for 1 is to 2.5, trailing my stop, reducing my risk, and to the upside, 10 pips above appreciation level. I look for 1 is to 2.5. All right, there we go. And then for bonus,